2024 has gotten to an end and 2025 is around the corner. And I know you want to start trading forex in 2025, but you don't even know where to start or even how to start trading forex. Before you can even start trading, you have to have a good trading strategy that would help you know when to buy and when to sell. So today I'm breaking down for you guys how to create and build your own trading strategy and start making money off of your own analysis in the market. Now, there are three criteria that makes you a professional forex trader. One is the ability for you to handle your emotions. Some call it your trading psychology. The ability for you to handle your emotion before a trade, while in a trade, and after a trade. Secondly is your risk management strategy. Your risk management strategy comes with the amount you risk while in a trade and how you manage your trade while in a trade, right? And then thirdly is to create a good trading strategy that fits your trading style, a strategy that won't enslave you, a strategy that will make you free with the market, that you don't have to think too much, very simple and well detailed. And so that's why I'm here today. I'm breaking down for you guys what my strategy is and how I trade this strategy in the market and how I'm making money using this strategy. And you can try this out and add a little thing from what you know in this market, or maybe your experience, add to it, and then develop your own trading strategy. It mustn't be like my own. You can also trade mine, and if it's working for you, fine and good, we make money together, right? So we'll get to the chart, and then I'll show you guys how this strategy is paying itself and how you can make money using this strategy. Now, before you can even get into creating a good strategy for yourself, you have to understand which kind of trader are you. Are you a day trader? Are you a scalper? Are you a swing trader? If you are a day trader, you can also use this strategy. If you're a swing trader, you can also use this strategy, and also scalpers can also use this strategy. But why I emphasize on knowing which kind of trader you are is for you to be able to know which time frames are you going to be looking at in the market. Now, for day traders who use the 4 hours time frame to identify the trend in the market, the 1 hour to identify the current trend in the market, 15 minutes to take their entries. Also, they use the 1 hour to identify their support zone and resistance zone. The day traders, they will look into the weekly to identify the trend, the daily to identify the current trend. Maybe then they also use the 4 hours to identify their zones. They use the 4 hours and find their zones in the market and take their trade using the 1 hour or 30 minutes time frame. For the scalpers, they look into from the 1 hour time frame and they find their overall trend, the 30 minutes to identify their current trend, and 15 minutes to mark their zones and take their trades with the 5 minutes candle time frame. And all these candles also that we talked about, the engulfing candle, the star candle, the doji, they display themselves in all these time frames, right? Now, a kind of trader would obviously give you an edge to how long you can keep a trade and how long you can stay in the market. Right? For day traders, they can stay in the market as long as they want. They can stop to a year if they want to. They can stop to a month, a week, a day, 2 days, 3 days. But for day traders, you have to execute your trade that day and close your trade out within 24 hours or even that day, right? Some day traders, maybe depending on how volatile the market is, you might not even stay up to last up to 2 hours, and then you have made your profit or hit your stop loss. Either one, they are all good, right? Now, for the scalpers, the same thing, they don't stay long, highest maximum 1 hour, and they are good, made their money and move their way, right? So let's get back to the chart. There are these conditions. Now, you can see that these conditions, we have what? Conditions and criteria for a good trading strategy. Now, first is what the conditions, right? First is the condition, second is what entry, stop loss, and take profits. Now, looking at this now, it tells you that your good strategy should have a condition. I see condition as an edge, right? These conditions comes in combination what with the trend. Is either a continuation of a trend or a reversal of a preceding trend, right? And then the support and resistance zone, and also what the chart patterns. Now, these conditions should come in line with each other before you can say, okay, I'm looking out for what an entry. In like when these criteria come in confluence with each other, and like okay, now the next step what is to find out an entry. Now your entry has their own criteria We have the candlestick pattern, which is the engulfing candle, the doji, the star candle, the hammer, the tracer, and so on and so forth. Right now, I talked about the chart patterns. You can go up my video and check upon the chart patterns and the candlestick pattern, so you can understand what I'm talking about here. Right, and then the next is what the stop loss. Now, this stop loss now helps you to know when you are going to get out of the market if you are wrong. You take profit, we tell you when to get out of the market if you are right in profit. The stop loss is in loss. Maybe you are risking 50 euros or 50 pounds or 1,000 pounds of your capital in a trade. When it gets to a certain level in the market, you are out. You lose that your 50 pounds, you lose that your 100 pounds, you lose that your 100 euros, right? Now, this stop loss helps you to regulate the amount of money you are risking or you're exposing in the market, right? The take profit is the inverse, the profit you are making, right? The profit you are making. Now, these conditions are very, very important. The conditions, the criteria for this good strategy. If your strategy doesn't have an edge like this, the condition, and these are my own criteria, right? I use the trend. I always try to follow the trend as much as possible. And when I'm not following the trend, is either I'm seeing a chart pattern that is trying to tell me there's going to be a change in a preceding trend. Then I can now say, okay, when this chart pattern fully forms, right? And then I can now actually take a trade inversely of the preceding trend or against the preceding trend to another direction. And if I'm right, I make my money. If I'm wrong, I lose the money. That's what forex is all about. Now I'll be showing you guys a graphical representation or a sketch of what my strategy will look like. Then after that, we'll now get to the chart and now try a lot of scenarios and show you guys how to trade this strategy as I talked about earlier. Now, as you can see here, I have different conditions and I have different sketch here, about three sketch. This is, and then the first one, this is one. Let me name one for you guys. This is number one. This is two. Sorry, this is two, and this is three. As you can see here, right? Now, this first one is an example of what a trend reversal. As you can see, there's a preceding. As you can see at this zone, there is a preceding downtrend, and then this consolidation before a reversal to the upward direction. Right now, this is where I'll be taking my entry. I'll be looking out to enter the market after a break of the consolidation and then a retest. This is some call it what, a break and retest strategy. They call it the break and retest strategy. Right now, this is a continuation pattern. Now you can see price is in a preceding uptrend, then a little retracement, and then we get up our trade, our entry at the bottom of the retracement, maybe a head and shoulder pattern, a double top, or a double bottom at this point, a double bottom or a candlestick pattern that will give us an entry, right, an edge. Okay, so now we are now gonna start buying. Buyers are coming in the market. An engulfing candle, a star candle, a doji, a hammer, a pin, bar candle, so on and so forth. There are a lot of candlestick patterns, right? Depends on which one are you looking out for at a certain level. Once you see them, would you identify them? You can go to my video and watch about these candlestick pattern and how to identify them and how to trade them. Now, once you look out for these in these zones, you can now start to buy right here. And this is also an example of what the reversal pattern. Now, as you can see here, we have an head and shoulder pattern here. It was a preceding uptrend, then a chart pattern showed at this zone. This is a chart pattern at this point, which fully forms, and then we can now get an entry at a retest, at a breakaway after the breakaway of this good support zone. At the break of the good support zone, there's a retest, making it what, a resistance zone, and then we start selling all down here. Then I'll be showing you guys what these how these guys display themselves in the chart. Now, before I get there, I want to understand that as a day trader, I'm a day trader, right? You're looking out for this retest. And these are retest, for example, this break and retest at the 4 hours time frame, at the 1 hour time frame, 4 hour time frame, most especially, they are looking at this breakaway and the retest. Then once you see this break in the 1 hour or the 4 hours time frame, then you're like, most especially why I say the 4 hours and the 1 hour, why is because when a break is properly, when a support or a resistance zone is properly broken through in a 4 hour time frame or a 1 hour time frame, is always healthy. Down those who are looking at it in the 15 minutes time frame, it can be very, very sketchy in 15 minutes because there's a whole lot of candles. But in the 4 hours time frame and the 1 hour time frame, there are healthy candles. And when they properly break through and close above that support or resistance, or above or below the support or resistance zone, it gives you a edge, right? Once you properly break in the 4 hour or the 1 hour time frame, you now get to your 15 minutes and get yourself a good entry. Now, as you guys can remember, in our entry we have arbitrage for our good entries. We have the candlestick patterns and also the chart patterns that can display themselves. So when you go to 15 minutes, you look out for what, a double top, a triple top, then or a double bottom or a triple bottom, and then a candlestick pattern that will tell you, okay, let's start buying. Right now, we'll get to the chart and then I'll show you guys what I'm talking about. As you can see here now, you see that price is currently ranging at this current zone of the market. Price is currently ranging and showing us hitting a resistance zone and hitting a support zone and bouncing back of each other, right? Now, as a professional forex trader, your insight should be this. Okay, it's either price breaks above my resistance zone and then at the retest of that resistance zone, making this a support, I'm gonna buy, right? Or the price gets below my support zone, I retested it again, making it a what? Making it a what? A resistance zone, and then we'll sell. But now, at this scenario, we can have two scenarios in whatever market displays at this point in time. Is it when price breaks above here and then a retest, you are looking at for what? A change in market in trend, right? A change in market movement. Now, from a downtrend, you are looking at for what? An uptrend. If market breaks below, right, at the retest, you are looking at for what? A continuation of the previous trend, which is a downtrend, right? A continuation of that trend or a reversal, a counter trend, right? So let's see what the market will do and how we can trade this. Well, remember, we are just telling you guys what you would do in case if you see another scenario. But here we are going to be trading what the change or the counter trend, right? The change in trend. But in case another scenario comes down, you can actually trade this same pattern as a what? As a continuation strategy, right? So let's see what happens in no time. So as you can see, price has gotten up to the resistance zone. So remember we said we are looking up for what? A break, right? So let's wait for the break. Yeah, we have our break. Now, as you're waiting for a break, this is the 1 hour time frame, this same thing now. Look at this from the 4 hours perspective. From the 4 hour perspective, right? You see that the break price broke out of this resistance zone properly well, right? The fact that price broke out of the resistance zone properly well shows us that okay, there's a change in market direction. There's a change in market direction. At a retest, then you are gonna buy. Right? It has to break proper. Why we use the 4 hours time frame for this kind of analysis is so that we won't be like tricked out in the market. Like maybe, for example, price didn't actually break very, very well and maybe close a little bit above the resistance when you're like, okay, price have broken. It has to properly break the body at least halfway. At least halfway of the body should be above of that resistance zone to call it a proper breakthrough, a proper breakthrough or break of that zone, right? So as you can see here, it properly broke through this resistance zone. We are looking out for a retest. As you can see, price is currently coming in onto our zone. Remember, as you said, I marked it. So in no time, we'll get to a 15-minute time frame. Let's get to the 15-minute time frame to check for our entry, right? We zoom in. Let's watch and see if we can get a pattern or the market and then give us a good entry to see what we can do with the market. So you can see price is becoming choppy. Now this the to read candlestick pattern and the volume of candlestick. That's why you have to learn how to use candlesticks. Now looking at this, you see that the volume of the candlestick is very, very, very little candles, right? Even though this is 15 minutes, in 1 hour time frame, it will obviously show you this way. The volume is very, very little, which tells us that what sellers are losing it in the market. Sellers, there's no much money for sellers here. There's no much volume for sellers now. So the answer I think, okay, your strategy or your bias is right because what the sellers are getting, they are not strong in the market and the buyers are getting in. Looking at the volume of the buy candles that are coming up, right? So let's get ourselves an entry. And so this candlestick here gave me a go, right? But I'm still waiting because I want to see price break a little bit above this zone. I want to see price break a little bit above here, and then we'll take our trade. Take our trade. So now we are looking at a little bit sticky pattern, something like this. I like drawing whenever I'm seeing pattern to know. Okay, remember a break and then a little retest and then I'm gonna buy. Boom, you saw it, right? We saw this break, we price broke through this zone and then a little retest. Then we take our what? Our buys. Take our buys right here. Stop loss right below here. 20 pips. Or let's say 21 pips. You are looking at for what? A 40 pips movement. 1 is to 2 risk reward. Let's see how market plays out. Let's see how market plays out. Be patient with the market. Patience is one of the most important things in the market. If you are not patient with the market, you might not make good money in the market, right? You have to be patient with your strategy. You have to be patient with the way market moves and make sure you manage your trade very, very well. And your trade, like when know when to break even, know when to add to your position if you want to add position, and how to do that, right? I'm a kind of trader that likes adding position to a winning trade. Remember, you don't add position to a losing trade, right? And the trade is winning like this, you can find an entry, remind your stop loss, and then add your position. It helps you make more money in the market as time goes on, right? So we're waiting for price. Price is a little bit choppy at this point in time. So let's see. Sellers are trying to, make a move in the market, but no, the candles are saying it all. The volume is very, very little. The volume is very, very little. The buyers have more potentials in this market. The volume of buyers are more. The money buyers are putting in the market are more than the money the sellers are putting in the market, and they're in charge. So you have to be patient and wait for price to give us what we need. We are still waiting. We are still waiting. Okay. So as we are waiting, let's talk about how to identify this strategy. Right? It's more like an experience. It's more like something you learn in no time. Oh, TP smashed, TP smashed, TP smashed, TP smashed. Very easy, right? So as we are talking, right, let's talk about how to observe the market. Now, it's not all about the strategy. It's all about observation. If you're able to observe your candlestick, the volume, analyze what the market is doing at a certain point in time using the knowledge, little knowledge you have about the candlesticks, right? You see that this market is very, very friendly, right? If you understand the volume and the nature of the candlesticks, because these candlesticks make it very, very easier for us because I don't even know how we did analysis with the line chart and all because those ones, I think for line chart, I think it will be much more better for you if you are more like a double bottom, double top. I think all those chart patterns you can understand them with a line chart, but these candlestick patterns helps us to have more edge in the market. So you have to understand the candlestick pattern is one of the most essential part of the technical analysis. The second scenario is what? The continuation pattern, the continuation of a trend. For example, price on an uptrend, as I showed you guys the graphic representation of the price on an uptrend, a retracement, and then we buy at a retracement. If on a downtrend, price is dropping, and then at a retracement, we now start to sell, right? So why do we use retracement, and why do we use retracements? Not just any retracements, right? If you look carefully, you see that retracements that happen here. See, retracements that happen here are little retracements, but this looks like a major retracement. How do we identify major retracements? We go to the 4-hour time frame and we see major retracements from there. See, price came down, formed a double top, and then it's going down again. Now, this is what we call major retracement, and this is what we call a critical and a very, very interesting support zone, because from the time frame, 4-hour time frame, you see is a very, very strong one, right? So let's get down and see what we can get up of it from the 15 minutes time frame. Nice. Nice. As you can see here, you see price formed this candle, this bullish candle, this healthy bullish candle, overtaking or over like covering. The number like this is not an engulfing candle, but the candle shows us that okay, buyers are about to take in the market, and I see that is a very, very good uh, confluence to actually take this trade for a buy. So let's take our trade. This is us long here, right? And along here, stop loss right below here. This is our 27 pips, so we are looking out for a 1:2. Okay, this will do. 65 pips will do. Let's see how this plays out. Okay, nice. See, very simple. So these are the kind of zones I would like to even add positions. If I'm to add position, these are the kind of zones. This psychological level, price breaking out of it, and then returning psychological level. I can now try to add a position there and minimize my stop loss, maybe at break even or even a little bit above, around somewhere here. Let's see how it goes. Play a little bit faster. Okay, the profits are about to hit, and here we go. Take profit smashed. Take profit smashed. Right? So these are very, very simple strategy. We just use the support then with our candlestick pattern. Now some people might find interest to use the trend line. The trend line is very, very good. I sometimes use trend lines. For let me see if you can get a line from here. Okay. Now, getting a trend line in collaboration with your psychological level or your resistance zone or support zone is quite okay, right? So this trend line was quite obeyed, because for me it's actually obeyed, right? Because price didn't go too far from it. For me, it actually obeyed. I can say this is a good one. So another scenario we have, as I explained, was what the reversal. Reversal, I showed you guys something like this. And then price retesting this neck zone and then to the downside. This is where we're gonna take our entry. So this is how we call this trade, right? So as you can see here, we have this as our head, we have this as our two shoulders. This is our two shoulders. This is our two shoulders, right? And then this is the neck zone. The neck zone. I think I should mark the neck zone with something like this. Okay. So what are we looking out for? We're looking out for trades within these zones. Trade within the zone. Trade within the zone, right? And price are properly breaking through the neck, trying to come back, and then we make it our resistance zone, and then we are going to sell down to the downside, right? So let's see how this plays out, and then know how to take our trade. Now let's go down to the 15 minutes time frame to get a proper look at our entry. Price is getting choppy as you can see. Whenever you see little candles this way, trust me, tells you that the buyers are losing their volume. You see the volume the buyers used to buy, and then as they go to this zone, it's still losing the potential, still losing the pressure, right? It's still going down, telling us okay that sellers are about to get in the market. Right? You should know how to learn how to study this candlestick by volumes and also by their formation, right? So let's see if we would get an entry. Right, just getting in a little bit around this zone and see what the candle will look like, and then take a trade probably. Boom. Price is in there. Price is in the triangle. So now we're going to wait for our entry, maybe a bearish candle that will give us an edge. Now, look carefully. This candle is a nice one. Candle formed here in between. In between this looks more like an evening star, but not an evening star. This is a looks more like an evening star, but not an evening star. Doji, no doji evening star, but like this more like say like this is a doji. So predict doesn't, you don't even know where the market is going to go. Either it's going to go up and then boom, this bearish candle. I think this should be where we'll get our entry now. Should get our entry here to short. Stop loss right very little as 10 pips. Right, let's say 11 pips. Remember, I'm gonna make about how much? 20 pips. We are done. Let's see how that goes. Whoa, crazy, crazy, crazy one. Quick one, quick one, quick one. How to be patient with the market, bro. You have to be patient with the market. If not, who knows? You might get it where you're not meant to. You know, you won't get it where you're not meant to get out. So boom. You see, after this said there was a crazy spike to the downside. A crazy. You see, this strategy is one of the most important. For me, I feel like without this strategy, I can't trade. Without this strategy, you can't actually make money out of the market. Simple, very very easy. You spot your zones, you spot your chart patterns, you chart your candles, you spot your entries. Okay, where am I going to get my entry? As I said, one is your condition, two is your entry, then your stop loss, and then where your take profit will be. Remember, nothing less than times two of what you are risking in the market. Right? Nothing more than that. Nothing less than that. Sorry, I mean nothing less than times two of what you're risking in the market. So as you can see here, you see this strategy is crazy. It kills like you can make good amount of money here if you understand simple candlestick patterns. I made a video about this candlestick pattern. You can go and watch it, and also chart patterns. So guys, if you enjoyed the video, feel free to subscribe, like, and also share to your friends that want to know how to build their own strategy and develop their own strategy. Now this strategy, as I said when the video at the beginning of the video, one, you have to have your conditions straight. What are the criteria for me to say, okay, I'm going to sell, I'm going to buy? Firstly, or you are looking out for a buy at a particular point in time, or looking out for a sell in a particular point in time. You have to understand your trend, how your trend works, how continuation patterns work, and how your reversal pattern work. A counter trend, right? A reversal maybe buys an uptrend, and now it wants to go down to the downside, right? You have to know when. If you don't see, just avoid the market. That's all it is. If you don't see them, just avoid the market. Take a break, maybe a day, come back the next day, and obviously you will see something in the market. Learn to take a break when you know sometimes as a forex trader, you be like, you must take a trade today. No, 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 no. It doesn't work like that. It's all like that. Sometimes you're a human being, you're not a computer, you're not a system, you're not programmed. Sometimes you don't see things that you know you are meant to see, right? And then when you don't see them, try to avoid the market. Try to avoid the market, go chill, and then come back later. Trust me, you will make better amount of money in the market. Now, is this strategy 100% accurate? That whenever you use this strategy, you would make money. Whenever you use it, you're 100% sure you make money. Now, as I said, I will always say this: no strategy is 100% like accountable, accurate, right? But I can tell you 80 to 90% of the times you use this strategy, use it for, you are going to be in profit. Most if price actually, if the market doesn't go through with all this with this strategy, at least let's say 2 out of 10 times or 1 out of 10 times if you know what you're doing. So guys, I think this is the end of the video. If you like this and you like what I'm doing, subscribe, let's go together, and I'll see you guys in my next video.